This is more of a melt-up, but I think we are at all-time highs for a good reason. Look at how many different dimensions have seen a decline in uncertainty and a de-escalation of tensions. It's pretty clear now that we have avoided a no-deal Brexit. Phase one of the trade deal seems to be on track in some way, shape, or form. The Fed communicated recently and very clearly slow. It was a mid-cycle adjustment, 3 rate cuts, they're on the sidelines, no more rate hikes, couldn't be clearer. But most of all, growth is coming in above expectations. Third quarter GDP growth, 1.9%, earnings growth above consensus expectations, and job growth was higher than expected.
Ron, how do you react to what Sandip just said?
I take a somewhat different view. I do think the market is pricing in a lot of good news. The market is assuming a no-deal Brexit. It's assuming a trade deal. And I do think there's a little bit of risk here that's hard to imagine what could cause an upside surprise in markets at this point. I do think valuation also is getting stretched in some areas. And one of the biggest challenges in the market right now is that basically the value stocks are not offering very much defense because they're typically very cyclical at this point. And unfortunately, the defensive stocks don't offer good value. So I think it's a tough market for investors because a lot of good news is priced in and there's more uncertainty on the downside ahead, in my view.
And how could that uncertainty manifest itself? In other words, we really haven't had a 10% correction this year, right? We had one last fall, but it's been...
Right. I do think the biggest risk I can see near term is really around trade. I think we've introduced a lot of uncertainty into the corporate supply chains globally. And I do worry that the market's underestimating the severity and longevity of this challenge between the U.S. and China in terms of trade tension. So I tend to think if you get a phase one deal, it's likely to be 1 step forward, 2 steps back. And I do also think it's moved from the economic arena into a national security arena, which is a much longer term strategic challenge between the U.S. and China. So I just caution about getting a little too optimistic around deals being the comprehensive solution to our problem with China.
You know, this time last year, Sandip, we were sitting pretty as well. And then December happened. We had the worst December in the history of the stock market, fell 18%. Then we came rocketing back. Everybody kind of blamed that on a quarter-point rate hike by the Fed. But do you worry that we could be in for another December-like event? I mean, market structure seems to be in some ways a little broken here.
No, not at all. The Fed was tightening at that time in the face of a slowdown, which spurred fears of a policy mistake or a misstep. They've been very clear in their communication with where they stand, so that's one clear contrast from last December. And growth is showing signs of picking up. So Ron is absolutely right. Look, none of these are a panacea. Valuations are full at this point. So any movement higher will have to come from fundamental growth based on, earnings picking up and economic growth reviving.
But address Ron's point, which, if I'm paraphrasing him correctly, is that don't put too much stock, literally, into a phase one trade deal because it may be smaller and less significant than the market anticipates. And number two, it will leave out there big, looming, longer-term collisions between the United States and China that may, in the end, be far more important.
So I contend that the market has come to realize that this trade war is not simply a destination. This is going to be a long, drawn-out journey that lasts for several years, if not decades. And so it better get used to this chronic uncertainty, the 1 step forward, 2 steps back that Ron was talking about.
Let's give Ron a final thought here. Ron, jump in.
No, I agree with that, and I do think it's a years-long, if not decade-long plus story in terms of U.S.-China strategic rivalry. I think this is basically an environment, though, that really highlights the importance of security selection. And while I think equities are preferable to fixed income, given the risk-reward, I do think it's a critical time to upgrade the quality of what people own in your portfolios, but make sure you're not overpaying, because there's no defensive characteristic in overpaying for a stock.
All right.